Welcome to ReduceMyDebtByThousands.com, buying and selling debt, Stage 1. You're back. That's great. Thanks for joining us for this next video. We will be discussing what we refer to as Stage 1. This is where you, the investor, profits by creating a passive residual investment income when buying debt contracts at a discount as a safe long-term investment. If your monthly payment does in fact arrive via email transfer, you know everything is great. If the monthly payment does not arrive, we note to dispatch our recovery team to rectify the problem immediately. Now, this next point is very important. Keep in mind, we have an assurance fund you can participate in which will guarantee all your debt investment. Our lender guarantee assurance fund will guarantee your investment. We will discuss and explain in detail how we can offer such a bold guarantee a little later in this video. But first, let's discuss some very important questions and answers regarding buying debt contracts at a discount as a safe long-term investment for profit. When buying debt contracts, what is the objective? It is to buy the debt contract less than the principal amount owed. For example, if you could buy a debt where the borrower owes $48,000, but you purchase the debt for $20,000, that would be a great deal. But the real question now is, how is this accomplished? Answer: by being in a power position while conveyancing is being completed. What is conveyancing? Conveyancing is simply the private lender's funds in exchange for the proof of ownership of the debt produced by the Canadian borrower's present creditor. As a private lender, it is crucial to audit all loans, which obviously includes requesting proof of ownership of the debt when paying out the debts being consolidated. This process is known as conveyancing. Why audit all debts being purchased? It is a well-known fact within the financial industry, debts are bought and sold as a daily business practice. Therefore, the private lender could be forwarding funds to the incorrect entity if proof of ownership of the debt is not requested. This is why we always ask for proof of ownership of the debt when purchasing debt as an investment. Fact: in the financing industry, debts are bought and sold every day, and when creditors sell the debt, they are not obligated to notify the borrower. In the description below, we will place a link proving without a doubt the banks are selling debts via a process called securitization without informing the Canadian borrowers. Considering debt is sold every day, this means if the creditor sold the debt to another lender and you, the private lender, pays out the original creditor, that creditor would have been paid twice. This mistake would leave the private lender and the borrower in a compromising situation. This is why we audit all debts being consolidated by our private lenders. How does understanding the process of auditing loans by requesting proof of ownership of the debt within the conveyance process allow you to purchase debt at a discount and profit? If the creditor cannot prove ownership of the debt, you have just found yourself a profitable deal. All debt created by the bank is either kept for their long-term portfolio or sold. If the bank sold the debt and you position yourself correctly within the conveyance process, we have seen investors buy $48,000 of debt for $20,000 simply by using our administrative conveyance techniques when auditing loans. If you can recall the 2008 world financial crash, the banks openly admitted to selling debts irresponsibly to the world market, so logically, What followed was Canadian private lenders started requesting proof of ownership of the debt when paying out the banks when consolidating loans they were paying off on behalf of the Canadian borrower. Prior to 2008, the Canadian private lender were just like the rest of society, conditioned to believe the banks are to be trusted without question, never requesting any documentation from the bank proving they did not sell the debt and are in fact still the rightful owner of the debt before paying off the debt in full. Fast forward to the present moment. Considering the bank's track record, it would be foolish for anyone to blindly trust any large institutional corporation such as the banks. Keep in mind, the loan auditing process has been around for centuries and now is being used by investors worldwide to purchase debt at large discounts. Let's now discuss what we can expect from an average discounted debt deal. In an average discounted debt deal, you will purchase the debt at a 50% discount. Here is an example. You would be purchasing a $40,000 debt for only $20,000. Taking into account the interest rate charged over a 5-year term, you would have now made your $20,000 initial investment into $55,843, receiving a $930 monthly passive income for 5 years. On average, we have seen our buy and sell discount debt system allow private lenders to turn $20,000 into over $50,000 instantly on their accounting balance sheets. How? Well, it's the same as if you bought a car that is worth $20,000 for $10,000. Then your net worth has gone up by $10,000 according to any accountant's balance sheet. Well, debts are no different. They are considered assets from an accounting perspective. Therefore, if you purchase a debt worth $50,000 for $20,000, your net worth has just gone up by $30,000. With this in mind, you now have more financing ability from the bank's perspective when we purchase a contract via an incorporated company. Once your incorporated company has created a cash flow via your monthly payments from your debt investments, you now can borrow money off that cash flow to further invest into anything you choose in order to make more money. This is a brilliant way to execute a business technique known as leveraging. But that is another video in itself. We will discuss at a later date, so let's keep on track. Our buy and sell discount debt system creates an amazing, safe, long-term investment when you take into consideration our debt contract assurance guarantee. Now, as we mentioned at the beginning of this video, we will now discuss and explain in detail how we can offer such a bold guarantee via our Lender Guarantee Assurance Fund. To make this investment as safe as possible, we have developed an assurance fund that will replace any debts that go delinquent. A delinquent file is defined as when a borrower misses 3 payments. How it works is very simple. You will pay only $20 per month for assurance on your debt consolidation contracts. If the borrower misses 3 payments in a row, we will take that loan contract back and replace it with another of equal value while recovering the 3 original missed payments. You must be asking yourself the question, how can this possibly work? Well, allow me to explain. Because our debt contract buyers network buys the debt at such a discount, taking the loan back and renegotiating it at a lower payment still yields large returns for us, the manufacturer of the debt you purchased. For example, In our first video, we mentioned we purchased debt contracts worth $20,000 for as low as $2,500. But to accomplish this actually takes a lot of time and energy via the conveyance process. But once we have manufactured the debt contract to buy and sell, we sell the $20,000 debt to an investor like yourself for only $10,000, having all of our hard work pay off while still producing an amazing long-term investment for investors like yourself. Truly a win-win-win situation when we consider we are helping a Canadian family to break free from the bank's self-manufactured compound interest monster debt trap. From our experience in general, people do want to pay back their debts, but life happens, like injury at work, loved ones die, divorce. But all these situations, when handled correctly by our friendly professional recovery team, will result with the payments resuming within 6 months to a year. Considering we have already replaced your debt via our lender guarantee assurance fund and your debt contracted investment is going as planned, we then simply repackage the deal and sell it to another, not losing a penny. Worst case scenario, if the borrower refuses to pay us after taking back the loan and renegotiating at a lower payment, the debt contract buyer network has partnerships with lawyers who will collect via liens on assets on a contingency basis. This again is a profitable arrangement with the lawyers due to us purchasing the debt at such a discount when manufacturing the debt to buy and sell via our conveyance techniques. So with all that said, hopefully now you can understand how we can make such a bold statement such as we guarantee all of your debt contract investments while you, the investor, profits via passive residual investment income when buying debt contracts at a discount as a safe long-term investment. In this video, we discovered how to buy a discounted debt contract, creating a safe long-term investment. In our next video, we will show you how to sell your discounted debt to make a quick profit, now creating safe short-term investments.